What's happening, guys, and welcome back to another Sunday Scan. We have a ton to go over this week. I'm going to run through a bunch of different charts. We're going to talk about markets, some different setups that are working, some different dynamics with the index, and some things that we saw with the data. And then we're going to go through our watches for the week ahead and hopefully have some great setups and some great opportunities for the upcoming week. So we'll jump right into it. Before I get going, I'll just give the disclaimer now that I'm not a financial advisor, and these are not buy or sell recommendations. Everything that I'm going to talk about is for educational and informational purposes only. So I'm going to pull up my chart, and the first thing I want to go over were some of these moves in SPX or on the index over the last couple of days. So Friday was a big data day, and basically, especially from more of a macro perspective, just like how companies have their earnings report, their quarterly earnings report, and you check in with how their revenue is doing, how their growth is doing, how their earnings are doing, and all that stuff, their balance sheets, prospects, competition. It's like a check-in for the companies. Just how that happens for individual stocks or individual companies. Economic data is basically the check-in for the economy as a whole. And so you have a lot more reports. Sometimes, they're every week or every couple of days of basically what are the things that matter to an economy and to markets. And then you'll have those data days where you'll basically get an important jobs number or an important unemployment rate number or an important GDP number. So it's just, if you were to take America as like Americo and use the economic data indicators the same way that someone is using the financial indicators for a company on earnings, it's kind of a similar thought process. So we had an important earnings day on Friday, and that was basically a big check-in with jobs, with the unemployment rate, and a couple of other things. And basically, we had a very weak jobs report. So there was a setup that presented itself on SPX that I traded fairly well with put options, but I just kind of want to walk through how I kind of came to that conclusion and how you can kind of trade some of these things if you've experienced the patterns before. So basically, there's two things that tend to happen on big data days. So one of them is that people are expecting volatility on important data. So what do? Is they usually really hedge themselves in the market. So they prepare for big data days by hedging themselves in the market. They can use put options. And basically implied volatility will increase. Basically, people expecting there to be big moves. So what tends to happen is if you have a data announcement and the data is bad, sometimes you'll still have a gap up on it as those hedges come off. Sometimes, it sets up for really good reversal trades. And so it's not always very clear on the data, but a lot of times if, the data comes out, you have a big gap up and then it starts to stall out, you can usually anticipate that if it was important data and it wasn't great, you can have big moves to the downside after all that, hedging positioning comes off. So this is an example. We had the data in pre-market, and then you had a big gap up, and then you basically had it stall out. So it failed to go out, go higher while those puts or those hedges were coming off. So what happens is that after it fails to break out, just like a failed breakout on a stock, if it goes on for long enough, then basically it exhausts out all of those hedges, it burns them all off, and then it's vulnerable to that flush. And just take a look at how clean this flush is. And, a lot of people use like the bar by bar analysis of just look at that steady down, each bar holding the other. And so those are supply demand imbalances when you have something so consistent like that. And that's what can set up on these big reversals after an important piece of data on a day-to-day. So, there's usually not very much edge trading, short-term index options on a lot of these things, but on important days like data days, these set up very well. They can set up, to the downside or to the upside, depending on the environment. So we had some great calls in Investors Underground live, kind of walking through this thought process and, able to get maybe 400% or so on the puts that we took there. So that was a great trade. I just wanted to recap, how that happens and how to really, gauge when the market is vulnerable to a flush like that. And then using other indicators like, if you were to look at SPX or SPY or any of those, major market indices, basically the components of them, like what really counts to them, is they're made up of, financials, technology, a couple of other sectors that are like the big drivers of those indices. So if I'm expecting some kind of reversal, or if I'm expecting some kind of big move, a lot of times I'm also tracking what are the big components of the index doing. And so, for instance, XLF is financials, and that is a very large portion of the S&P 500 index. It's about, I forget what the percentage is, but it's a very large percent, maybe 20%, 25% or something like that. So if I'm expecting the market to go down, I also want to check in with something like XLF to see how that's reacting. And that was reacting poorly to the data. And so you're using just these different things to piece together a thesis for the market. And then another thing that's very important is obviously large cap tech. And so you can look at a proxy like NVIDIA, which was also very weak while that was happening. So, using a confluence of factors, you can really anticipate some big moves. And that's a good way to kind of build a thesis and to possibly have some trades with proper size and proper risk on some put trades for a big reversal date like that. So I just wanted to walk through that. Now let's get on to some other names. So more of like a swing name. And again, this has been on watch for a while, but BE has really just been one of the market leaders, one of the strongest names in my opinion. You can see, and people are different. Some people really like to have moving averages on their charts. Some people have anchored VWAP. Some people have all these different kind of indicators. And indicators are great as they fit in with someone's system. I'm a much more generalist, so I bounce between a lot of markets and everything. So it's a personal preference that I don't have a lot of my charts. While I'm trading intraday, I do have VWAP on my chart, but for the most part, I'm using broad technical signals, trend lines, and fundamental analysis along with some macro analysis. So I'm using a lot of indicators, but they don't always show up on the charts. That's why a lot of my charts look pretty bare most of the time. But basically, BE, this is a leader in the AI power kind of space. So this is even acting better than OKLO or like the nuclear names, NNE. It's even acting better than some of the big utilities like GEV now. So this is just kind of a sweet spot in that AI power sector that is just holding up beautifully. You can see every dip, even on a gap down, it just holds up and just does really well. So continue to see bullish option flow on this. It's holding trend lines. It has the fundamental case for it. And it's just a sweet spot in the market. So you can just see how a really cleanly trending name can act if you catch the right one, despite a lot of market volatility overall, especially on data. So those are the types of names that I like to focus on for swings, something that is very resilient and not necessarily market correlated. It gets to a point where if the market gets weak enough, then it can drag almost anything down with it. But while the market's choppy, you want to look for things like this, in my opinion, for swing names, buying on dips, selling into rips, or, if you have a low enough average on some of these, then you can just kind of ride and trim along the way and raise stops as it's trending. We have a little bit of crypto weakness coming up. So again, we have some shakeup with the economic data, and that is spilling over into Bitcoin and spilling over into Ethereum, which is a good kind of cycle analysis or a good cycle indicator for me. So we also had news that some of the treasury companies are being cracked down on by the index or by NASDAQ and some of these. So if one of the main driving variables of Ethereum was these treasury companies basically bidding it up and driving that, if that slows down and you've had it consolidating up here for a while, it can be more vulnerable to a flush. It doesn't mean that it's destined to go down right away, but it means that if a big portion of the buying slows down and you have some more people who have a higher average in here on their longs, they're more susceptible to being stopped out, and it's more susceptible to mean reverting a lot more. So that's just something to keep an eye on. And it could be, a product like this might even be better than some of the crypto names, like the treasury names. So for instance, BMNR, we've talked about this a lot, but what tends to happen is that as these companies, the treasury companies, they raise a bunch of money, they buy Ethereum with it. Eventually, you'll have situations where it goes at a big premium to NAV or their net asset value. So basically, if they bought 5 billion in Ethereum and the market cap is trading at 10 billion, they're at a big premium to what it's actually the net asset value of it is. But what tends to happen is that as these cycles go on, that net asset value will basically decrease until it's almost on par with what it's at. So if it has $7 or $8 billion in Ethereum now, and the market cap's around that, you really need to watch Ethereum to dip before these will, because it can be a frustrating short trade if you're anticipating these going down, but Ethereum's not making big moves, because if this is trading at around NAV, then you're going to get more stalled action rather than a clean unwind. So that's something to keep in mind if you're trading some of these treasury names. And it almost acts like futures in a way. So basically, like take MSTR or something like that. A lot of times, you can have these names that start to trade pretty weak compared to the crypto itself, if it's expecting crypto prices to go lower in the future. So if it's kind of pricing in potentially lower crypto prices in the future, I think that's what we're seeing with MSTR and a few others, because again, MSTR has kind of capped a lot of their upside. That doesn't mean you can't have squeezes and big clear outs along the way, but I think overall, unless Bitcoin does something crazy to the upside, I think that this is basically top for the cycle. And now it's more just consolidating, and will probably pull pretty hard on weak action. Another name I want to kind of go over was just compare this THAR and this IPDN. So these were both names that we compared to each other on the way up. You could see, that first leg, consolidation, second big leg. And then after that second leg, they tend to become a lot more vulnerable to the downside. So you can see THAR, this was kind of, leading that. Big leg up, consolidation, another leg up, and then much more vulnerable once that supply demand, kind of profile resets. You have longs with a higher average. You had shorts already get blown out here. And so now it's much more vulnerable to those big round trips. So THAR kind of leading, and you can see a similar pattern forming with IPDN. It's very similar. We see it, consistently in the market. Another name I wanted to go over was this Avgo. So they had earnings. They picked up a big client. They had pretty good earnings. A little bit of a retrace on there after the reaction, but what really got hit was NVIDIA off of it. So that's something to keep in mind, that if within the AI kind of space, you have some other players taking market share, you can have some relative weakness. At least short term in some names like NVIDIA, really just consolidating after a big move. So those are a few things to keep an eye on. And then another couple things to keep an eye on for the week ahead, and just to kind of recap the recent action. So on that bad jobs data, basically the worse the economic data is, the greater the chance that the Fed cuts rates, and they cut rates more often or in a larger amount. And that really gets priced in with the 2-year bond yield. So basically, the Fed is very directly correlated to short-term bond yields. If the Fed lowers interest rates, short-term bond yields fall, just as much, and sometimes they fall further and more if they're pricing in more cuts. And so we always talk about when short-term bond yields are falling, you basically want to look at things like IWM for some relative strength. So even if the general market is a little bit choppy, if you are having those, sharp, basically downticks in bond yields, you can still have some good strength in IWM. So that's one to watch for more relative strength of the indices in the week ahead. And then finally, I'm going to talk a little bit about gold. So this has really been like a perfect environment for gold. You can see it had a really nice, consolidation and then a breakout. Again, this is just a gold proxy, but if you were to look at actual gold, it has a similar chart. So basically, what makes this a good environment for gold is you have, and I'll try to keep this as simple as possible, but you have like you have bonds and you have different durations. You have like 2 years, 5 years, 10 years, 20 years. So short term all the way to the long term. When you have basically the short end of the bond duration curve, so basically the 2 years, the 5 years, all those yields are falling, but the 20 year, the 30 year, those are all still pretty high. That's a good environment for gold, because short term, it's like the Fed is easing, but long term, it's like inflation expectations are going up. So that's the short version of why gold is going up. And you can also see things like the US dollar, it's going down. And that's another thing that's inversely correlated with gold. So, this is a good environment for gold, but I will say that if we get some kind of surprise economic data, like maybe a really good jobs report, or maybe a really hot inflation print that causes the Fed to maybe not want to cut rates as much, then that can be a cause for a big mean reversion trade in gold. So again, look for the factors. Why is gold going up? Because the Fed's going to be lowering rates, but then long-term inflation expectations are a little bit higher. If you have something disrupt that, then basically be on watch for a mean reversion trade. And what I would look for is for a piece of economic data that is either a really good jobs report or a hot piece of inflation data that could cause a mean reversion trade in gold. And we talked about mean reversion trades and that setup last week on Sunday Scan. So if you need a couple of ideas for setups in the market, we went over, I think, 4 of them in pretty good detail. A swing setup, a mean reversion, some liquidity traps, and a first day, high float rotation kind of name. So if you need setups for your trading playbook, go back and review those and see if any of those make sense for you. Now we'll get into the main watches for the week ahead. So basically, the first one on watch is Google. So this has been on Sunday Scan for a couple of weeks as relative strength. This one has been at a reasonable valuation for a while, and it started to have really good news. And so if you basically have a good equilibrium, good fundamentals, good valuation, but now you start to get a positive judge ruling, and also different deals with Apple, like regarding their AI projects. It's just a good relative strength name in the tech sector, while you have some other names like NVIDIA and a few others that might be lagging a little bit, at least, in the short term. So Google is on watch for calls in the week ahead, especially if the market ticks back up. It can always be a little bit tricky to forecast what we think the market's going to do. So rather than doing that, it's always easier to have names on watch for relative strength and relative weakness. And then when you go to the market, if it's trending really well up or trending really well down, you have kind of the go-to names there. And then you can also have some reversal names too on a larger time frame, especially if you're swing trading. Another name. So this opened. This has been an interesting one, and I think I'd like to talk about it a little bit in the context of cycles. So a lot of times what will happen is that during small cap cycles, you'll have a ton of names running for a while, but you'll have a different cycle kind of form where the amount of names running might start to slow down, or the range might start to slow down. And what tends to happen is that a lot of retail people will congregate towards one or two or a handful of names. So I think what is happening is that Open is getting basically a wave of people who are maybe have been trading a whole bunch of different stuff. But as some of that stuff, the cycle changes, it slows down, they can congregate towards one or two names. And, if they see that this isn't working, but this name is going up every day and it's extra short crowded, people really dislike Eric Jackson and, all the hype around it. And it's kind of funny to watch. But again, just be a trader, be unbiased, and just think in terms of supply and demand dynamics, and not should this be up, should this be down? It really doesn't matter. It's, what is the supply and demand profile of this at this moment in time or over your time frame, and then seeing if you can formulate a trade plan from that. So you see a pretty, classic cup and handle kind of pattern here. Big leg up, consolidation, second leg up, clears it out, and now you can see this volume is just building, well, along with good technicals up here. So in my opinion, this likely has some kind of a blowout, maybe past 10 or so in the coming week or so. I have no position in this, but this would be something where if it has a week open, and again, everyone's trying to short it, and it's crowded, and you have the retail people piling in because other things have slowed down. And you also, I'll make one final note on this name. A lot of times when you have these cycle changes where everyone congregate towards one name, that's when hedge funds tend to get involved, because it's so liquid that they can have big positions, playing games in it, or doing option stuff or doing all that. So it can be a good vehicle, just how like the quantum names have been that way in the past cycles. And then you have other names like JOBY and others. It's basically good vehicles that are small enough to kind of push around, kind of shape the narrative, but still big enough that they can size pretty well with that. So that's kind of my thoughts on open. So again, looking for weak opens. So if it gaps down and gets saved, or it looks like it's going to roll over and get saved, I basically look for something. I want to see a big speed up in not only price action, but the pace of price action. So rate of change is very important. I'd like to see a volume blowout and a big move up, parabolic, before really getting on watch for a reversal trade. Another name, this MDB. So this has been a very solid, relative strength kind of leader. They had good earnings and got a bunch of, guides up. So you can see that after these big reactions and consolidation, you can kind of draw a line up here. And once they start to base above that line, they're usually primed for another leg higher. So I'll be watching this with options and possibly with equity as well in the week ahead above that line. So you can just draw the technicals on there. App was an interesting one. So in Investors Underground, we were talking about the S&P index inclusion. So every now and again, the index will basically kick out some names and it'll add in some other names. And so there's usually a basket of names that are potential candidates to be added to the index. And so what our job is for the people who are following this, is to basically narrow down what could be the names that would possibly be added, and then have a game plan. If they are added, they usually have a huge spike in after hours when it's announced. It's usually on a Friday and it comes out at about 5 p.m. or so. That's when the announcement happens. And so basically, we had Hood and APP get added to the index. So App really has my attention, and part of the reason is that I think App was supposed to, or could potentially have gotten added a while ago, but there were short reports against it, and I think a lot of things caused a lot of doubt, and it got delayed. And so what happened is that as the price kind of kept going up, the market cap of this company got huge. And so basically, when a stock gets added to an index like the S&P 500 index, it's market cap weighted. And so if you have a giant name like App finally get added, the index has to buy a ton of shares to actually get an appropriate allocation to it. So over the coming 2 weeks or so, that can really be another layer of demand. Now we'll see if that gets priced in and just has a giant gap up on Monday, or if if it's a little bit more steady. But be aware that you can have very large moves when you have a market cap this size. Now I'll compare this with Hood. Hood was another name that got added to the index, but I don't have as much of a bullish bias on this one because I think especially if crypto is slowing down, then that can be a main driver for the stock. And I think that you could have had maybe some head and shoulders kind of toppy action going on here. And really, it's not so much the shape of the the technicals, of course, that matter, but what it's signaling is that after a massive run in a name like Hood, and you start to have this consolidation, just like we talked about with some of the small cap names, what you have is a supply demand profile shifting in the stock. And so basically you have, this big run up, and then you have a cycle change, and it starts to just basically consolidate and hang around there. So a lot of the shorts that were, fighting it along here, maybe they've given up. And then you have a lot of longs in here. They're used to buying dips that have been working. So they buy this dip, they buy this dip, they buy this dip. Suddenly their average is up here around that 100 mark. And then if it starts to fall below, you can get some nice moves down. So this will most likely gap up on Monday because, again, the spike in after hours because it was added to the index. So it's probably around 108 or 110 or something like that. So what I would hope to see on Monday is maybe a very large gap up that I could then zone in for a reversal trade, just like with the index we saw at the beginning of the scam. So what, again, I'm looking for is like a big final clear out and, bullish news getting added to the index. But again, it has a different profile than App because this isn't as large. So the allocation won't have to be as great. So at some point, whether it's on Monday or at some point this week, I would love to have a big gap up, maybe towards the 115s or so, and then really get this on watch for a reversal trade once that kind of exhausts out into that level. And I think we could, especially if the market gets weak, have a massive reversion trade on that. So that will definitely be on watch for me. And then just like I mentioned before, financials and XLF is something that I track for the index all the time. But within XLF or within financials, I'm always looking for relative weakness. And right now, if you look at XLF, again, it's been trending pretty well. You had a bad reaction to the data. That doesn't mean that financials are going to fall apart. It does mean that when they're weak, the market is more susceptible to also being weak. But if I want to play financials, looking for a name that's falling more than XLF. So that's really what relative weakness is all about. If you have something, an index or a stock or something that's leading a sector, dipping down a little bit, I'm looking for something that's dipping down a little bit more. And it's the same way on relative strength. If the market's going up a little bit, I'm looking for the names leading above that. So if you look at like the index is like, the average, you're just looking for something that's either above average or below average. So if the market's trending down, you're looking for something that's below average and, acting even worse. And if the market's trending up, you're looking for relative strength. So something that's acting above average. So those are just good concepts to really focus on in the markets, in my opinion. And then also if you're looking for reversal trades, that's a big sign too. So if the market gaps up and everything's green, but you have one or two of the tech names that had a negative catalyst and they're red, that's a good sign for relative weakness. So if the market does reverse, you kind of have your go-to name to attack there. And it's the same way if the market's been beaten down and everything opens up red, but you have one or two names that are green, they had good catalysts, then those are usually the names to go to if the market starts to reverse, and those will be the leaders for the day. So the final two names that I want to go over are this XOM and CVX. So these are basically energy names. Oil's been falling. Pretty simple correlation there, where it's if you are anticipating any kind of economic slowdown, plus you have just different oil suppliers like OPEC and some others basically increasing production, and America's increasing production. Like if everyone's increasing supply, then basically price can fall. and the profits of energy companies are tied directly to the price of oil. So as oil falls, it causes margin compression, and it can eat into the revenue and the earnings of these companies. So basically, those are the main topics that I want to go over for Scan this week. Again, we're being super active in Investors Underground. We're calling out all these trades in real time. The community has been incredibly active over the last week. Nate's in there, I'm in there. We have all these moderators basically sharing their market thoughts, and it's just a lot of experience working together, to find your part of the market that you really enjoy working in, and then being able to find trades that have controllable risk, good reward, and a decent probability of playing out. And that's really what trading is all about. So leave a comment, like, share, subscribe, and I'll see you all next week. But comment, let me know, do you like this format of Scan where we're just kind of going through a bunch of names? We go through some setups. Let me know what guests you want me to have on, and let us know what you want us to talk about. So that's all I have for you this week. Have a great week. We'll see you in Investors Underground. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.